Thank you all for coming. I'm going to talk about a couple things, and I wanted to talk, it's funny, when we first started looking at this program, we were going to really talk about Obamacare, the Affordable Care Act, and sort of where it was at, some of the things going on more recently, and how we're seeing them roll out, and what we think the real impact will be, especially right here in Maine. But before getting to that, I wanted to bring this a little bit closer to home and talk about some things that have happened more recently right here in our state. And as Lance mentioned, we've had some pretty interesting and exciting things happen over the course of the last couple of years that we haven't seen or really had an opportunity to have happen for decades. And since we had the change in leadership up in Augusta, we've had a real desire to reform healthcare at the local level, again, in ways that we haven't had an opportunity to do in a very, very long time. And you may be familiar, this past year we passed a bill called PL 90. And there are a number of things that PL 90 has done, and we're seeing a lot of different positive impacts here in state. But I want to talk about one a little more recent, which is the changes to Maine's individual insurance market. And when I talk about the individual market, I'm talking about people buying coverage that don't have access through an employer. So what happened most recently, the sort of most recent news, the changes in PL 90 that really impact the individual market take effect July of 2012. And the rate filings just came into the Bureau of Insurance, and this is sort of the framing of the good news. And before I give it to you, let me step back a little bit and just give a little bit of context if you're not familiar. Maine has done a wonderful job of destroying our insurance market over the last couple of decades. And in the early 90s, we passed two main reforms that I think really frame what insurance looks like in state today. And they're called community rating and guarantee issue. Guarantee issue basically says, if I'm an insurance company and you come apply for coverage, I got to give you coverage. Now that on the surface sounds fine. But what we don't have is sort of the balance to that equation, which says you can't wait till you're sick to come by. The other thing that we did was something called community rating, and what that essentially does is true community rating says, look, we should all pay the same rate, regardless of our age, regardless of our health status, regardless of how much care we're actually going to use. Now, I'm going to stick with age for just a moment. Now, it's probably no surprise to everyone in the room that we tend to consume more healthcare services as we age. I can tell you statistically that if you take a 20-year-old, let's say, and a 60-year-old, there's going to be about a 5-to-1 difference. A 60-year-old is going to consume about 5 times the healthcare services of a 20-year-old. So if I'm an actuary and I work for an insurance company, I want to price a policy. If I want to be actuarially accurate, I want to price that 60-year-old policy 5 times higher than I want to price that 20-year-old policy. Well, Maine said, no, we don't want to do that. We want everyone to essentially pay the same rate. We didn't quite get to the same rate, but we got awfully close. Maine law said you can't vary that rate by more than 1.5 to 1 or 150%. So if I'm 20 years old, which I'm not, and you charge me $100 for a policy, you can charge the 60-year-old $150 for that same policy. And the theory was simple. They said, well, we want that 60-year-old rate to drop. We know the 20-year-old rate's going to come up, and everyone's going to sort of pay the 40-year-old rate. That was the theory. Now, what really happened is everyone started paying the 60-year-old rate. And when PL 90 was being debated, we had some statistics on this comparing Maine and New Hampshire. And actually, a 20-year-old in Maine would pay 3 times what they would pay for the same policy in New Hampshire, yet a 60-year-old will pay about the same. And it's some pretty basic economics that translated to that result. Back at the time, we had about 100,000 people in this state buying individual policies. Today, we have about 35,000. So what's happened is that pool has just shrunk and shrunk and shrunk and shrunk. And I think it's probably common sense. Everyone would know this in this room, but it's not the oldest and the sickest people who dropped their policies. As those rates went up, younger people stopped seeing the value in the purchase. That's just to sort of frame out where we came from. I'm oversimplifying to a certain extent, but that's really what happened here in the state of Maine. Well, PL 90 did a couple of things. For the individual market, the first thing that it did was created a reinsurance pool. So it essentially injected more money into the individual market. Today, those 35,000 people, their premiums support the claims for their group. And they're high. So they injected more money to bring some of the cost down out of the gates. And they also expanded the age bands and allowed them to vary the rates more significantly between different age applicants. Now, if President Obama was standing here, or a lot of the folks down in federal Congress, they would not like what I'm about to say, but what Maine essentially did with PL 90 was leverage Obamacare to move right. We were one of 4 states more restrictive than this federal law is going to be for the rest of the country. Most states will see infinitely more regulations in their insurance markets than they have today. Maine, not so much. We were well down that path. And we actually pulled right. The law said that we could vary the rates by 3 to 1, and so that's what we did. Well, in the individual market, those 2 main provisions took effect for July. Reinsurance pool, varying the rates 3 to 1. So Anthem is the #1 writer of individual policies in Maine. And they have to file their rates for approval with the Bureau of Insurance. They do that on a quarterly basis. They did that for the 3rd quarter of this year, July. They did this about 2 weeks ago. Well, I got a call from the superintendent, and he said to me, have you seen this filing? Have you seen how good this really is? And when we were debating the law, there was a report out of the Gorman Actuarial Group out of state, contracted by the Bureau of Insurance, to say, look, these law changes, what kind of effect can we expect to see in our rates? And they estimated an average 12% decrease in the individual market. Well, the superintendent's telling me, look, I'm seeing rates that are closer to 60% decreases. And so the Bureau of Insurance developed a spreadsheet, and they compared the 4 main products that people purchase today from Anthem in the individual market. These are policies under the old rating rules. They compared them to 4 reasonably equivalent products in the, we'll call it the new market, under the new rules starting in July. Now, the first thing I'll tell you that the old products, if you have one, you can keep one. You're welcome to. This is what we call a guaranteed renewal state. The average increase on the old products was 1.7%. The high end was 17%, low ends were decreases. 1.7%. I can just tell you that is the lowest increase, average increase, that we've seen in years. The average increase, we went down through, looked the last several years, were over 20%. Most consistently over the last several years. And so this spreadsheet, I need you to visualize this with me for a minute. It had 4 products. There are 10 age brackets per product. 0 to 18, 19 to 24, etc., etc. So 4 products, 10 age bands, I'm up to 40 comparisons. There are 5 levels of coverage per product. I could buy single coverage. It could be for me and a spouse. It could be for me and a child. It could be for me and children. Or it could be for me, a spouse, and children. 5 separate categories. 4 products, 10 age bands, 40, 5 products, 200 comparisons on this spreadsheet. MHPC did not create this spreadsheet. The Bureau of Insurance did. So 200 comparisons. 187 of them were decreases. The average decrease was over 34%. Now, we did an article on this and pointed this out. Great news, seeing some of the most significant rate decreases in the individual market that we have seen in decades in this state because of a free market reform passed under the legislative leadership in Augusta this past year. There were a few articles that rebutted our findings. And I just want to talk through a couple of these things we were accused of. One, we were accused of cherry-picking the data. They said, well, not all rates went down. They're right. 13 of those comparisons were increases. I'm just going to pause and let you think about who's cherry-picking the data for starters. They also said, well, yeah, but you're looking at one carrier, one product, in one point in time. Okay, one carrier, they're right. We looked at one carrier, was Anthem. There are 3 carriers that sell in Maine's individual market. Anthem's one, they're the biggest. They sell the majority of policies in the individual market. The second one is Harvard Pilgrim, who administers Dirigo. That has about 6,000 or 7,000 people in it right now, and it's going away. And by the way, it's kind of hard to compare with that one because that coverage is subsidized. And then the third is a company called Mega, and I won't get into all the details, but I'll just tell you that that is what we call an indemnity product, not a major medical product, and it's a night and day difference. One carrier, they were right. They said it's only one product. Well, Anthem has 4 products, which were in this comparison, that are primarily sold in the individual market. They also have a couple of other products that are mandated by the legislature that are exceptionally expensive that nobody buys. We didn't put those in the comparison. They're right. We cherry-picked. We only had certain products. I should say the Bureau of Insurance cherry-picked because it was really their comparison. And then they said it was one point in time. And I agree with that one too. It was one point in time. We're just looking at July 2012. Here's what I think is important about it being just looking at July of 2012. Well, on that spreadsheet, I saw rates for the youngest age categories of as low as $100 a month. Anyone remember the last time they saw a $100 a month premium? I saw the lowest deductible for the lowest age bands at $200 a month. I saw rates under $200 a month all the way up to age 49. I saw increases in the 60-plus category that were over 30%. I'm sorry, decreases over 30%. One point in time. When you do that and you start to make coverage more affordable for people who are younger, they buy policies, which they stopped doing when we made them more expensive. And so we were accused with this law of catering to the insurance business, right? It was a handout to the insurance industry. And they'll say, well, yeah, but you get those people buying in, it just means that they're going to pad their profits. Let me tell you why that can't happen. There's also something in Maine called minimum loss ratio laws. They're here in Maine and they're federal as well. That says to an insurance company, for every dollar you collect in premium, you have to pay a certain amount back out in claims. Can't go to profit or overhead or administrative expenses. It's 80 cents on the dollar in Maine's individual market. So as more people buy, and when that young person buys a $100 a month policy, they're still going to use a fraction of that in care. As they get more revenue in for more people buying policies, it's not that they can just sit there and add that to their profit margin. They have to reduce the rate. Because if they don't, and that loss ratio falls below 80%, they have to refund it anyway. So one point in time, we've set a structure where we've enabled more people to buy more affordable coverage. We haven't even begun to see the impact of that. We also have created a market that's more attractive for companies to do business. And it's not a secret or an accident that Anthem is the primary writer. There were about 11 or 12 carriers that were writing in the individual market in the early 90s, and they all left. I believe the term we use often is fled when we changed our laws. Well, I know of 2 carriers today that are actively pursuing putting new products on the market for Maine's individual policyholders. They are big insurance companies, however, and they don't move fast. And so they literally could not get them on the market by July, but they're coming. And I think 2 carriers will have new products, the first 2 carriers, before the end of this year. So what that also tells me at that one point in time is that that's the numbers that Anthem came up with 0 competitive pressure pushing them down further. They did this rebuttal argument, and then shortly after, the Sun-Journal did an article to follow up. The article that the Sun-Journal did was not about the rates dropping dramatically in Maine for individuals as they did. The article was about the fact that our article was rebutted. So I would just, again, point to the Maine Wire in the back of the room and say it's never been more important that we have a new media outlet here in the state of Maine. So I just wanted to share that because I think that's what the real story is. And if you read the papers over the course of the last couple of weeks, I'm not so sure you'd have gotten the real story. So I want to move from here and talk a little bit about what's happening with Obamacare, both at the federal level and at the state level. I was sharing with a group earlier that as an insurance broker, I've been going out to clients for years now and talking about the impacts of this law. And one particular client, we speak to the employee group every year and at their wellness fair and talk to them about what's going on legislatively, and more importantly, what can they expect to see for impacts on their insurance plan as a result of the things that are going on under the dome here in Augusta and down in Washington. And in the beginning, when the ACA was passed, the Affordable Care Act, there were a few things that impacted our insurance plans right away. But most of the impact of this law really comes in January 1 of 2014. So we've been in this sort of window, if you will, where the immediate impacts have come. We've got a little bit of a delay here, but the big stuff's coming in 2014. Well, I happened to do this talk for this group maybe a few weeks ago, and I was saying to them, I don't have a lot to report about new things impacting your plan today, but I do have a couple of really interesting things that have happened, one at the federal level and one at the state level, that I think are interesting and I think have an impact on what's going to happen in 2014. And the first one is the Supreme Court. Now, when the law was first passed and the lawsuits first flowed in, I would talk to different people around the country here in Maine and around the country, policy people, a lot of attorneys, and I would say, you know, what's your take? What do you think is going to happen here? And it's interesting because everyone always answered me with great conviction, but about 50% would say this law is out of here when it hits the Supreme Court. And about the other 50% would say they're going to uphold it. This thing's here to stay. Now, the arguments were heard several weeks ago in the Supreme Court, and as I've asked people since, it's been almost 100% unanimous. The opinions that I'm hearing are that the individual mandate at least is in real jeopardy. Now, we're going to know in June, but a lot of people think the individual mandate is probably going to get struck down. I have about as consistent feedback and opinions saying that they think that the rest of the law will be allowed to stand. You've heard this term severability. I'm here to tell you that I don't think the severability issue matters one iota if the individual mandate is struck down. And I just want to explain my logic. This law, in theory, wanted to cover more people. Remember hearing there's 60 million people in the United States that don't have coverage. We have to solve that problem. We need to extend coverage to them. So on one end, we want to extend more coverage. Now, the way in which they do that under the ACA is they tell insurance companies, remember guarantee issue, you got to take everybody who comes. And by the way, you cannot exclude pre-existing conditions. Well, let's think about that in isolation for a second. Pretty motivating for me as an individual to say, well, I have no sense buying while I'm healthy. I'll wait till I need it. Then the insurance company has to take me and they cannot exclude pre-existing conditions. Well, the insurance company, if you remember when they were debating this law, people were lining up and putting their support behind this law, including the insurance industry. And they said, you know, we're okay with that if. And the if was, you got to balance the scale so that this thing doesn't come apart at the seams. We need people to purchase not just when they're sick, but when they're healthy as well. We need everyone in the pool. Hence, the individual mandate, the requirement that all of us need to have coverage. If that individual mandate goes away, the scale is no longer balanced. They know that it's no longer balanced, and they know that the law cannot hold in its current form without that key piece. It's not an incidental piece. It is a structurally fundamental component to make that policy work. So that means they need to go back through Congress and figure out how they're going to tweak that law to make it work. I've already been reading articles from around the country talking about theories of ways that they could start to approach that. But either way, I started that sentence with, they got to go back through Congress. You may have noticed that Congress has a slightly different makeup than it did when they first passed that law. And I think it is literally anyone's guess as to what comes out the other end if that happens. Well, there's something else that happened here locally that I think is equally as important. If you think about the intent of the law, cover more people, we're going to do that by requiring insurance companies to take everyone, and we're going to balance the scale by requiring everyone to buy coverage. Well, that's sort of the theory or the intent of the law. But the architecture of the law is exchanges. This is the place where everything happens. Within the exchange, subsidies are doled out to those who are considered eligible. The requirements on insurance plans and insurance companies are enforced. I don't know if that's the Lord or if it's... are enforced through these exchanges. The requirements on employers, for those of you that have companies or work for companies with more than 50 employees, you've got requirements that you've got to deal with as well. All of that is regulated and enforced through these exchanges. And what the federal law essentially said was, okay, look, all you 50 states, go create these exchanges. Build this architecture for us for this law to be implemented. And they said, look, we'll even give you money. So they created subsidies for the states to set these structures up. They gave some basic guidelines. They also said, if you don't do it, we're going to do it for you. And we'll create a federal exchange. Now, the state of Maine, as you know, has had a change of leadership. And yet, we've continued for the last couple of years to continue marching down the road toward establishing a state-based exchange. And if you wonder why, it's because they viewed it as a defensive measure. So many states run by conservative leadership have said, look, we don't like the law. We don't really want it to stand. However, still hear me? Okay. The basic feeling was, well, okay, we probably will like something that we create more than what the feds hand down to us. So it literally was a defensive stance to march forward on establishing these exchanges. But Maine's legislature surprised a lot of people a few weeks ago, and they actually voted not to move forward on establishing a state-based exchange. I think that decision, A, was the right one, and B, has enormous implications on January 2014. And I want to just speak to why that happened. So there's been this growing trend of people coming to the conclusion that maybe we don't want to take the bait. Maybe we don't want to establish these exchanges. Now, when a bill gets passed, and I think most of the people in this room know, it goes through one side of Congress, goes through the Senate in this case, went through the House. Well, what came out of both of those bodies was not the same. Very different laws. Then they get together, work it out, and get it to one bill to go to the president for signature. Well, with the Affordable Care Act, this happened. It came through the Senate, it came through the House, but before they could get together and work out their differences, something happened down in Washington. Ted Kennedy died. And it wasn't so much Ted Kennedy's death that was the upset, it was who replaced him that was the upset. Scott Brown out of Massachusetts, who was a Republican, first one to hold that seat in an eon or two. Well, now they suddenly didn't have the votes that they had to work it out. So they had to use a parliamentary trick called reconciliation. Well, reconciliation is normally used to work out technical issues with a bill. You recall 2,700 pages. Let's just say there's more than one or two technical issues with that particular bill. And they could only do so much in the reconciliation process. So many things that were fundamentally flawed, they could not fix. Well, of course, legal scholars have been poring over those 2,700 pages ever since, trying to find the weak spots. Here's a couple. I told you that the Fed said, look, states, go set these exchanges up, we'll give you money for it, which they did, and they appropriated the money to do that. Well, the threat of the Feds coming in and doing it for them, there's one small problem. They didn't appropriate any funds for the Feds to do it. That means they got to go back through Congress to get the money. Again, different makeup, probably going to be an interesting battle for them. They also didn't grant the same authorities. So a state-based exchange can dole out subsidies, for example. It can also impose requirements on employers and insurance plans. Well, in the law, it's explicit that some of these actions can happen in a state-based exchange. They're not authorized to do them inside a federal exchange. So again, they're in a position where they have to go back through Congress to work this stuff out in order to make this happen. So a lot of states started to look at this and say, we think we should say no. And I know in Maine that the legislators who were having to make this decision started to say, well, if we don't think this law is good, and we don't want it here in the state of Maine, why don't we create the biggest uphill battle as possible for them to implement it here? And what's the way to do that? Make them do it themselves. Make them work out all of these issues. Here's why I think this is important. I keep telling clients January 1, 2014, I'm going to stop saying that, because I think we just pushed the deadline out by a couple of years minimum. They got work to do to make this thing a reality now. And when I talk about Maine doing this, by the way, I don't want you to think of Maine as sort of being a lone ranger out there. We are in the majority right now of states that made similar decisions. But very impactful, two things, federal level and state level, that I think have a pretty significant trickle-down effect on this law, and if it comes to pass, when it's most likely to come to pass. I had several slides, and for the sake of time, I removed quite a few of them, but I was going to remind you why we ought to be thinking and concerned about this law taking effect in Maine, but there's just a couple things I thought I'd point out which I found interesting. Now, I talked about them wanting to cover more people. Obviously, the flip side of that is they got to pay for it. And there are a whole host of things in that law that are revenue generators to pay for that law. One of them, for example, is a new tax on insurance companies. I had the client yesterday ask me, if the law passes, what's going to happen to our rates? And I just didn't hesitate. I said, they're going to go up. I said, well, how can you say that so definitively? And I said, well, I'll give you one example, and I'll share it with you. I said, the law says that it's going to tax insurance companies. Well, the intent was, or the perception was, that insurance companies are making too much money and their profits are too high. Okay. So they're going to tax that. The government is. They're going to take that money, because they're great stewards of our dollars, and then they're going to turn around and put that back out to the aid of consumers. Okay. Let's just assume that, yes, they're going to take the money, use it appropriately, and put it back out to some benefit for you as consumers. But Forbes did a little bit of a study on this when the law first came out, and the dollar amount tax that they're imposing under that law is larger than the aggregate profits of every for-profit health insurance company in the nation. So if you don't think that those taxes are going to be passed on and impact your premiums, I think you should think again. They also do some interesting things. They're going to put a new tax on to do comparative effectiveness research. So this essentially means that they're going to put a whole bunch of bureaucrats in a room, and they're going to study healthcare and help us understand how to compare services and ways of treating diseases. Now, I'm not saying that that's not a good idea. I don't have a lot of confidence that a group of bureaucrats in Washington are going to do that in a way that's meaningful for me. I'm kind of leaning toward, give me the information and I'll make that comparison myself. They're also going to put dollars into wellness grants. Again, if you know me and you know some of the work I've done here in Maine, you know I am an absolute advocate of wellness programs. I think it's a huge component of something we need to be focusing on to get our costs in check here in state. I think it brings personal responsibility to the table. I think it is critical. But I'm not a big fan of giving the money to Washington and letting them figure out how to dole it out. They also had something called small business healthcare tax credits in that law, where as a small company I could get tax credits to help me offset the cost of my premiums. It took me, when that law came out, they sent out regulations on it. It took me It took me a couple days actually to wade through the regulations to try to explain to clients how it worked. And I've tried to work with a number of clients that might be eligible, and most of them determined it was too complicated for the effort. So I have some concerns about it going into their hands first. It was interesting, I was sharing a story the other day. I was in a meeting, this was maybe a year or so ago. It was the former head of the CDC here in Maine. He had a PowerPoint up on the wall, and he was walking through all of the money they'd spent over the past 20 years and different initiatives that they had undergone to try to, improve the health in Maine, and it was tens of millions of dollars in aggregate. And he was really upset because LePage had just been voted into office, and they were about to get a new chunk of money to go on their next initiative, which was one of the ones, the more recent ones he mentioned was making sure that if you're at a sporting event, a soft drink advertiser can't put a sign up to lure your children. And they were talking about the next big initiative to have schools do BMI testing and send notes home to parents to let them know that their kids are overweight. And he was really upset because he said, the likelihood of them getting those funds to pursue this project was really limited at this point. But what was interesting as he went through all of these initiatives they've done and all the money that he spent, he then went on to throw up a whole list of statistics that showed they had all their efforts and money spent had zero impact on obesity in the state. That trend had continued to climb uninterrupted with all that effort. It had zero impact on, well, a number of different health measures. Just food for thought. I also want to mention, why do I think this fight is so important and why Maine really plays an important role. The CBO, the Congressional Budget Office, who does a fantastic job estimating the cost of government programs, I might add. I think they missed Medicare by a few 100,000% or something like that, but they were close. They came out recently and lo and behold said that this is going to cost infinitely more than we first expected. That's the first revision. I think we got a few more on the way. I mentioned the Gorman report, which did this study on the impacts of Maine's reforms here in state. And actuarial firms they tend to be conservative. I mentioned what they estimated for decreases in the individual market, yet what they actually seem to be playing out to be. They also estimated the impact of the ACA. And in their conservative estimate, they estimated that 88.9% of small groups would have a negative rate impact in 2014 as this law unfolds. So as we do these things and really start to have an impact and push our rates down here in Maine, I'm convinced that if this law does come to pass, we're going to start pushing in the other direction real quickly. By the way, there are a few things that are going to be happening as this rolls out, sort of where are we going from here. PL90, which I described, which went to 3-to-1 age bands in the individual market, well, it also does some changes like that for businesses. And those changes, the way that law was drafted, as I mentioned, it used the law to shift right. Well, what it also did is it used the law to shift right so that by 2014 it was in line with the parameters under the ACA, but it also continues marching down that path if the ACA is repealed. So it's not that we have to go to the legislature here in Maine and start anew. There are already building blocks in place that will continue to move Maine further and further down a free market path for our health care here in the state. And I think we'll continue to see decreases in rates. We were doing this talk, Lance and I, a few weeks ago up in Bangor, and somebody asked a question at the end. They said, okay, well, this is all good. It sounds like we're doing some good things. We got some positive things happening. He says, but I keep hearing people tell me about the real root issue is the cost of health care. Not just here in the state of Maine, but nationally, it's the cost of health care. And they're right. Insurance reflects healthcare cost. It isn't healthcare cost in and of itself. And he said, what do we need to do next to really get at that root cause? And my answer was twofold. I said, first of all, transparency. And I was sharing the fact that in the state of Maine, I'll use an MRI as an example. You could spend north of $4,000 for an MRI in this state, and you could spend around $600. That's sort of the spectrum. You may not be aware of this, but you could spend a different amount for that MRI depending on the time of day you get it at that particular facility. Would be kind of nice to know before you went in, wouldn't it? You can buy the same prescription at different pharmacies and have rate differences 3, 4, 5, 600%. I was having someone describe to me a procedure that they were going to have done. They were in a health savings account plan, so they were doing their due diligence before having this service done. It was going to go to, they were going to pay for it. It's going to come out of their deductible. And she said, she looked at the local hospital where the doctor had recommended that she go, and the cost of that particular procedure was about $1,200. She did some research and found a place in Lewiston that was a standalone facility that offered the exact same service, the same procedure, and it was under $200. These are the kind of ranges that we're talking about, and I could give you thousands of examples, one after another, that would demonstrate this. I don't think we need somebody to sit in a room and compare the effectiveness of those two prices for us. I think if they flat out tell us, we're going to know what to do next. And the only one who's going to lose is the guy overcharging for that service, and they're going to have to make some changes. I kind of think that's okay. That's how markets work. The other thing that we need is something called payment reform. And you've heard a lot of talk about this, but let me just frame it briefly. We pay for healthcare services on what we call a fee-for-service basis. I go see my doctor, my provider. They do things to me. That's how they get paid. We've seen increases in the rate of lab tests and services like this in the United States directly as a result of our fee-for-service system. It's just that's where the incentives are. You get what you ask for. So there's a shift starting to happen where people are saying, well, I don't want to pay for things in healthcare. I want to pay for health, and I want to pay for results. There's another aspect of PL 90 which established a health insurance captive. This is an employer-owned association. I'm just mentioning this briefly because this is kind of an interesting experiment going on here in the state of Maine right now that's getting at payment reform on somewhat of a micro level. And they're starting to pay primary care docs different and saying, hey, we want you to actually pay attention and try to keep a population healthy and proactively do the things that are necessary to make that happen. And we'll pay you a certain amount for simply having that patient. We'll pay you a certain amount for seeing them as well, but we'll give you bonus incentives for producing the right outcomes. One of them, for example, is patient experience. Kind of a novel concept in healthcare. Another one is, hey, pay attention to the cost and give me a heads up when it costs more in the morning than it does in the afternoon to have those services. I'm giving you a little bit of a preview because it's an interesting experiment going on. I think it's those types of initiatives going on in this state that are going to change the system. And what we have to do is take a great big lever and change that delivery system. And we're starting to see some of those things start to unfold right here in state. It's not taking the government doing anything. It's really taking them getting out of the way and letting us do it on our own. You're going to hear more about that particular program in a future luncheon. On that note, I will stop talking and happy to take questions.
Joel, you mentioned that there's different rates for different facilities. When is that information going to be available on the internet or through the MHPC where the consumer can actually do comparison shopping easily and quickly and efficiently?
The question is, when is that information going to be in our hands? When are we going to be able to jump online and Google MRI and see, here's the rates? Well, it's happening piecemeal in different ways. One of the things that happens when you talk about payment reform and you talk about literally changing the delivery system, there are a lot of vested interests in this system. At the insurance level, at the provider level, a lot of vested interests. And when you start to change, there's a term called creative destruction. Well, a lot of people who are vested interests are really lining up right now to say, you're absolutely right, everything needs to change, we're behind you, just don't touch this piece right here. So it's not coming out so freely as we would like, it's coming out in pockets. Some insurance companies are actually starting to post that data. They're telling you, hey, if you're a client of ours, go online, we'll tell you what our reimbursement rates for these different services. Some of it's innovations that are being driven by employers that are saying, look, it's our money, we want to see the information, it's that simple. I think more of it's going to come from that angle, from pressure from consumers to say, A, to be aware that that exists, and then B, to demand that we get that kind of information. You'd be surprised how far you can get just by being your own advocate and asking questions. The first time you ask your physician how much something costs, you're probably going to get somewhat of a cross-eyed look. But if you ask them enough, they'll start to answer those questions.
We hear so much about testing and doctors asking for it because of lawsuits and then practicing defensive medicine. Where does that fit into this?
Yeah, that question came up in Bangor as well, and the question was, tort reform. It's something that wasn't included in the federal law. What's the status? And to me, it's not the impact so much of malpractice insurance, although that clearly is significant. It's just what you've referenced, which is the defensive medicine. I was talking to a physician just a couple days ago who was sharing that he had been an ER doc for a number of years in his career. And he said, as an ER doc, when somebody comes into the ER, he said, I had one main goal: get the patient out of the ER. He says, there's two ways I could accomplish that. I can send them home, or I can send them upstairs. And he was, in the context of this conversation, he was sharing with me that there's a lot of statistical information that tells you that the length of time with a primary care doctor that you have a relationship with correlates to your quality of life and your health. So you tend to live longer and be healthier longer when you have a longer relationship with a doctor. And the point he was making was that as an ER doctor, he says, I didn't know anybody. They just came in. And he says, so you don't want to make a mistake and you don't want to miss something. So what do? You do a lot more tests than you might if it was someone that you knew. If I could look at you and say, well, I saw you last week, I saw you last month, I saw you the month before, you don't look a whole lot different. I think you can go home and give me a call if it gets worse. But they don't do that. And he also said, where do you think we would default? They default upstairs. So I think there are multiple layers to that question. There is the whole defensive medicine piece because of tort reform and lawsuits, so sort of coming from our angle, but it's also how we actually access the system. And if you ever do it through an ER, we are by default driving the cost up substantially. Time to get back to that place where the primary care doc becomes the center of our healthcare lives, which we have not done for a long time, and quite frankly, we don't pay or reward them. But that's what payment reform is starting to really look at. How do we make that relationship central again?
You talked a lot about the individual market and the rates, and how about the group market, say, in small business?
Small business has seen, now the question was, we talked about the individual market, what are we seeing in the small group market? Now, the small group market did not, first of all, have a reinsurance mechanism, so no new money in the system. So when you start to change rating rules, but not inject more money, there's more fluctuation. You're going to have to move things around, if you will. Now, the same Gorman report that looked at these impacts for the ACA in 2014 also looked at the small group market. And we had, I believe it was over 80% of small groups this last renewal cycle, you may not have come up on it just yet, that had a better renewal than they would have absent the reforms passed here in Maine this past spring. So we're starting to make some steps forward in the small group market. We had, I think, almost 11% of small groups in the fourth quarter of 2010, 11, and the first quarter of 2012 that saw actual decreases. And there was an article recently actually saying, well, that's awful, only 10%. Well, that compares to less than 2% a year prior. So we're starting to get there, and I actually think you'll see some positive impacts on the small group market as a result of the individual market reforms. Because there are a lot of companies who are really small, 1 or 2 people. I mean, as an insurance broker, I can tell you if someone comes to me as a sole proprietor, after a little bit of conversation and a review of rates, the first thing they try to do is put their spouse on payroll so they can be a group, because it's a little less expensive. But I can tell you, if you look at the small group market, the micro groups, I would call them, have the worst experience. And so they are sort of subsidized by the larger small groups, if you will. So if we have a healthy individual market and more people in those really small companies have a resource there, that will actually take additional pressure off the small group market. Little by little, I guess, is how I would describe that. It took a long time to tank this market. It's not going to repair itself overnight. I want to mention one thing I forgot to mention before I take another question. And one of the other things we were accused of in these rebuttal articles was, well, but the policies aren't apples to apples. No, they're lower rates, but the coverage isn't as good. And they pointed to maternity care and said, oh, there's maternity care in the old policy, there isn't in the new one. That's actually true. Now, I suppose there are some exceptions to this, but generally speaking, I'm pretty sure maternity doesn't happen without your knowledge or by accident. I actually think you can plan for it if you have a little forethought. Here's something they didn't mention. The new policies cover mental health services, the old policies didn't. Hard to plan for that one. They also said, by the way, that, well, they got these limited prescription benefits, limited pharmacy benefits in these new plans. That's, this is awful. Look how limited these benefits are. They didn't tell you they were comparing to policies that didn't have any. So I compare insurance plans for a living. Spent a lot of time putting plans side by side. None of them are ever apples to apples. You can take my word, or I'd be happy to sit down and show you line by line. I'll just tell you, they're comparable. They're not exactly the same, but they're not what they were painted to be, which is infinitely less coverage.
First of all, I'm a former licensed healthcare professional, and what I saw in my practice is rationing. With those people who had insurance, but those people who had Medicaid, there was no rationing for them. Okay, and then the other thing that I found interesting with your fee-for-service, I'll just give you a personal, just a little while ago, a couple of weeks ago. I'm in my 60s and I'm pretty healthy, and I do preventative medicine. Okay, my doctor kept trying to get me to do all this testing, and I refused. I said, why do I need that for? Okay, and I don't know if his agency gets paid more for this, or he gets a bonus, or whatever. But I was surprised that he kept saying one test after another. And I said, that's ridiculous, because I was in the system as a professional, so I understood more than perhaps more people. But I think Obamacare, and I haven't read the whole thing yet, but I think there's going to be rationing with this. I have seen it personally in my clinical practice. And I also think this is going to fund the killing of unborn children.
There's another important point that was just raised in that question, which is Medicaid. It was a small piece of your point, but I want to point to that for a second, because Medicaid and Medicare are two major payers of healthcare services in the United States, and proportionately at a higher rate in Maine. And when you talk about rural areas, especially, proportionally higher in rural areas. Washington County, for example, there's a report that came out that said something like 40, I don't remember the number exactly, about 46%, I think, that are on Medicaid in Washington County. Now, add to that Medicare, people who are 65 and older. We're well over half the population, probably 2/3 of the population. When a patient goes in under those two systems, the government's done a great job of keeping their costs where they want them to be. They just tell the docs what they're going to pay them. But they actually pay them less than it costs to deliver the care. And I'll give you two guesses. I'll give you one. Who do you think picks up the tab that's the difference? It goes right to those private insurance rates. During this law, there was a lot of debate saying, look, we've really done a lot of good things here in the state of Maine over the past 20 years. Don't unwind those things. And they pointed to the fact that, Dirigo, for example, did a great job of reducing the uninsured rate. Well, they actually didn't. The uninsured rate over the last 20 years has really been pretty level in the state of Maine. In fact, at the start of the year ago, I remember reading there was about 130,000 people uninsured in the state, and they said they were all going to be insured by 2009. Any idea how many are uninsured today? About 150. So, but what did happen was private insurance rates went down while Medicaid enrollment went up. And what happens, the more people we put on that side of the ledger, the more cost shifting is happening. You hear that term cost shifting. It is not an insignificant burden. How much time do we have, Lance?
One more question.
Well, I'll take one more question. I think I saw a hand somewhere in the middle.
If by chance the Supreme Court upholds this individual mandate, what is going to be the impact of Medicare beneficiaries from Obamacare?
And so the question was, if the Supreme Court upholds the individual mandate, what will be the impact to Medicare beneficiaries? And you may recall in the law that about $500 billion, $500 billion of the funding for this law was going to come from Medicare. But I just want to assure you, I don't know who might be on Medicare in the room, we were assured there will be no impact whatsoever to your Medicare benefits. It should be just fine. Thank you all. I appreciate it.